Now let's compare the VA loan versus a conventional loan. We're going to look here at a $500,000 example. This $500,000 example is real life examples that we pulled before many times. You're going to see right out the gate, the interest rate on the VA loan is significantly more competitive. Mentioned earlier, it's usually we see between a quarter and over a full percentage point difference. In this case, kind of in between, 0.875. Now the loan balances, you're going to notice the loan balance is higher on a VA loan. That's because you don't have to put money down on it. And on the conventional loan, you have to bring, in this scenario we had, 5% to the table. Pretty significant amount to bring down to closing. The deal is you'll see that the monthly payments are still drastically different. VA loan is significantly lower because of that more competitive interest rate. And on top of that, you see that the conventional loan has private mortgage insurance. And we have extremely competitive private mortgage insurance rates. But even then, it just still shows. You add those up, there's a big cost savings in monthly payment on a VA loan versus a conventional loan, primarily due to that lower interest rate. Now, we took this exercise, made sure we added it up. We added the cost over 10 years when you might own that home. What is the difference then in the pricing? And you can see that once you add the mortgage insurance, the additional interest, and the cost of that down payment on a conventional loan, you have over $86,000 worth of savings on the VA loan. Now, we get to work with a lot of financial advisors. We get to work for them, love doing that. They tell us, Evan, hey, you take that and you invest it, it's well over $100,000. And they're right. We just take the more conservative example. If you didn't reinvest that money, you'd essentially have over $86,000 difference that you keep in hand. But there are more benefits to it and even bigger savings if you do compound the funds. Now, we also want to point out at this moment that, hey, the VA loan in most scenarios is the most advantageous loan type, but there are scenarios where the conventional loan can be very competitive with the VA loan. If you're putting a very large down payment, 20, 25% or more, you have extremely high credit, and you're subject to that VA funding fee, sometimes a conventional loan can be competitive with the VA loan. But you gotta have all three of those things come together to where we see that work. The key is working with a lender who can compare all those and go line by line for you to help tell you what makes sense and which loan type edges it out. The deal with a VA loan that's not in this series, but we discuss it in plenty of other places on our YouTube channel and our educational series, is on the VA loan, you have fantastic refinance options that are not allowed on conventional loans. The VA interest rate reduction refinance loan, called a VA IRRRL, something you're going to want to look into. And if you have a comparable VA versus conventional loan, that will usually tip the VA loan over the edge. So learn about the VA IRRRL.